market lately has been nuts, for lack of a better word. We've had some crazy weeks going on, and I think we're about to start. God, probably one of the craziest that we've had in a long time because there's so much going on this week. And that's all I've heard from advisors. All of them have been talking about what's going on with interest rates, what's going on with the Fed decision, who changed the unemployment numbers and why did they change them. So, I figured I'd talk to a couple of you guys and see what you had to say about these. I've got to give them answers anyway. And, one of the things that I heard about this morning, and I was a little shocked, but not really shocked, was, you know, unemployment isn't going up as quick as everybody says it's going to. People have stopped hiring, supposedly, but why have they stopped hiring? And, I've heard two different reasons. And I know you guys hear it all the time, but I wanted to know what you thought. I've heard half the camp is saying that it's tariff related, that this is the tariffs finally starting to come in. And the other half is saying it's AI related and everybody's going to lose their jobs. AI is doing everything. Any thoughts on those?
Well, I think that AI has caused probably some of the unemployment or the potential, the fear for it out there. But I think, and when I look at AI and I call companies and get in their AI phone system, it's terrible. You can't get to the right person at the right time, and it takes 15 minutes extra just to get there. So um, uh, I don't think that's a big cause.
Yeah, I hate those phone systems. I keep hitting zero just trying to get through to an actual live person. Rob, you don't like talking to people. What do you think about AI taking everything over?
What do you mean I don't like talking to people? I love talking to people. I don't think AI is taking over anything imminently. I mean, certainly it's fulfilling some tasks, coding and whatnot. We've talked about this a lot, that AI is going to take some time to have a full implementation, and that doesn't, we don't know what that's going to look like in the long run. I would say anybody who's attributing current unemployment numbers to AI is probably a little misguided. The employment's still fairly strong, but weakening. Hiring is down, so is participation. I don't think either one of those things are necessarily AI related. It's just my opinion.
And the labor market's pretty much in balance, right, Rob? Yeah. And with unemployment rate at 4.3, that's below very long-term numbers. So unless there's something going on in the back, and you have to remember that there's, these numbers have been affected by people leaving government jobs. So far this year, it's been, I think, what, 250,000 in decline of employment at the federal level. So, the market has been absorbing, providing jobs in the private sector. The government's down. I'd say it's pretty much in balance at this point.
Well, and we have to count, at least historically speaking, we've always thought that there's some structural unemployment that occurs. There's transitional unemployment, there's the permanently unemployed, there's people in between jobs. I mean, we're never going to have a zero unemployment rate. And, with our aging demographic, we don't know how many people are leaving the workforce versus actively pursuing new jobs. So, I think in balance, as Phil said, the labor market is still fairly strong.
That word you use, structural unemployment. I heard that word the other day, and I heard it related, believe it or not, to the other part, which is tariffs. And with to tariffs and with everything going on with ICE and everything, that some of these jobs that we're completely losing the job. It's not that we're losing somebody doing the job, we're losing the job entirely, and that we're almost trying to do more with less. Do you think there's something to be said for that? And that's why unemployment really isn't, that we probably have more people just falling out of the whole unemployment thing. They're not even looking for another job, or they're doing with what they have.
Well, certainly as you have increases in productivity and efficiency, um, you need less people to do the same number of jobs. So that's one part of, I think, what you asked. And yes, of course, technological improvements, including AI, will help in that, or hurt, I guess, depending on how you look at it, but increase the unemployment rate. You also mentioned another, factor, which I don't think is statistically significant yet, but we are seeing some, you said ICE related, but I would say immigration related unemployment issues.
Mm-hmm.
So, you wind all those things up and it's maybe worth a few tenths of a percent. But
Now,
as Phil said, historically speaking, at 4.3, we're still, by all counts, historically low or high employment, low unemployment.
The interesting thing, though, is that weakening employment, to whatever degree you think it's weakening, is apparently the excuse that the Fed is going to use if they cut rates on Wednesday. Because
yeah, that's you're just bleeding into all the topics I wanted to get to today.
well, there we are. So, uh, the inflation numbers have not come down. In fact, the last 5 months they've actually increased. The Fed's favorite number hit a 5-month high in July at 4.64%, and the 6-month moving average is at 3. So there's definitely progress made, but I don't know that you can seriously say that it's a job done.
You were going to, Phil, if you were going to say, here's a case for lowering interest rates, and we have 3.1% projected economic growth and unemployment somewhere in the low fours, and inflation at 5-6 month highs, would that be a scenario under which you would say we would be looking to actively cut interest rates?
No. The
There you go.
only logical conclusion you could come to is that the market has priced the 2-year lower, and the Fed funds rate is above that. So you could call that a restrictive position, and you could use it to justify cutting rates. But from the economic numbers, no, there's no.
Interestingly enough, yes, economically, it's a poor case. And I think we're seeing that somewhat on the long end of the curve, wouldn't you say?
Yeah, and in fact, the key to analyzing what happens on Wednesday with the Fed pronouncement will be what the long end does. A year ago, when they cut 50 basis points in the short end, it kicked off over 100 basis point increase in 10-year yields and mortgage rates. So the market was saying at that time that the Fed had jumped the gun and was being too loose at the time. Now the market has, started to price in some cuts on the short end, and at the same time, the long end has come down as well, but not anywhere near, 25 basis points still above where it was a year ago when they started cutting rates. So again, how the long market reacts to whatever news and commentary they come out with on Wednesday will be the key.
That's perfect. Then you know what? That is a great place to end this week. I mean, everybody's waiting for what's going to happen on Wednesday, which is perfect. We try to keep as sane a view on this as possible and just tell you what everything says in black and white and where we see things going. We'll come back next week, hopefully, and we'll tell you what happened. Yes, we're going to come back next week. If you have any questions or want to discuss this anymore, you can reach out to AAMA at any time, and we'd be happy to discuss it with you even further. Other than that, thanks for listening in for a few minutes, and have a great day.
Thanks, everybody.
Thanks.